Welcome back to CEO Money. I'm Michael Yorba, your host. Thanks for joining us. All right. This segment is Danielle DiMartino Booth, president of Money Strong. DiMartinoBooth.com is her website. Danielle, welcome to the show.
Great to be here this afternoon.
I'm glad you're here. All right, you are known as a global thought leader on monetary policy, economics, and finance. Let me back up a little bit and allow you to put some color with this, because you've really got a strong background. I'd rather have you tell our audience about that, and then I definitely want to dive into the Fed, the economy, predictions for our economy.
So I'll be as brief as I can. We don't have very much time. I would just say that after graduating from UT Austin with my MBA in finance, I went after the bright lights in big city of Wall Street, and soon thereafter felt the invisible hand of what I did not know working in the background during the internet .com boom days of the late 1990s. And I came to understand later on in my career that that was actually the Federal Reserve working to stop markets from naturally functioning. So hence the irony that I ended up being Richard Fisher here at the Dallas Fed's chief advisor for the better part of a decade throughout the crisis years. But life is funny as we know it, and here I sit in Dallas, Texas.
Yeah, wouldn't you know? All right, you've got a really good handle, from what I understand, about the Fed, the economy, and predictions for the economy. Talk us through your thoughts, the world according to Danielle, and also the current events that you see that are really most notable you need to talk about.
Well, I think that the main takeaway for investors, for people who follow the economy, is that in the year 2017, global central banks worldwide, just envision as if Lehman Brothers was going under every single day, because that's the run rate at which we were seeing global money printing in 2017, to the extent that it summed to $2 trillion last year, which was a much higher rate than anything we've ever seen, including 2009, 2010. So $2 trillion in 2017, the world's best markets, record highs, et cetera. And that level is actually being cut down to $1 trillion this year. So you tell me what happens when you take away from the patient 1/2 of their methadone dosage, whether or not they may or may not throw a hissy fit. And that's exactly what we're seeing today.
That's what a lot of my people mainly I'm a market timer, but that's what we're starting to see is we're thinking that we're in the throes of something that could last just a little longer than most people expect and be a little stronger when it comes to the depth of the pullback than most people expect. I wanted to get your feedback on that.
Well, buy the dip mentality is it's going to take a very long time to kill it, but it will be killed, I can assure you, and most people probably don't want to hear that. If you look at the week-to-week investor sentiment surveys, most of the people segue from the bull camp to the correction camp, but they don't go all the way into the bear camp. But the bad news is that after the most complacent, potentially even comatose year in the history of the financial markets, i.e. 2017, the bumpy start to 2018 is not something that's going to be intermediate or medium term. It is going to be something that is a prelude to something worse in the markets. And again, I don't want to rain on anybody's parade, but we have had the second longest bull market in the history of the country. April crossed us over to the second longest economic expansion in U.S. history. For those who think that we should have several more years of Goldilocks kumbaya, throw in an extra refrain, I'm sorry, but I don't know what history book they're going that they're following.
I get it. Now, most people are looking at rising interest rate market here for the foreseeable future, meaning maybe at least the next 4 or 5 years. Do you think that what's set up right now that is definitely going to be making more of an impact on the market, or are there other forces that you see in play that people are going to have to pivot on?
Well, I do think that interest rates are actually the most important driver of markets in the coming years. You just have to ask yourself, when we were on the precipice of the financial crisis in 2007, worldwide global credit markets, global debt was at $150 trillion. Today we're at $240 trillion. So that's indicative of the fact that we cannot sustain higher interest rates. So there's that much more debt to be serviced. It's a very simple concept. If you take on debt, you actually have to pay the interest on it. And because there are that many more dollars that must be expended, I question the conventional wisdom that the economy is going to be able to sustain higher interest rates. I'm not so sure that that's the case. Inflation is real. The rise in short-term interest rates is also very real. We're closing today at the highest level of the entire cycle on the 10-year Treasury note, 2.96. That being said, I'm not so sure that the U.S. economy, to say nothing of the global economy, can afford, there's an easy word for you, can afford higher interest rates.
We've got less than a minute left, so that gives me the biggest current event that people need to pay attention to that's going to affect everybody.
So I would be paying attention, very close attention, to inflation in the coming months. It is very real. It is not a figment of an economist's imagination. Companies are feeling it. They're sweating it. Their profit margins are being hurt by it. And one Jerome Powell, the new chairman of the Federal Reserve, is going to pay attention to it. The danger is that he over-tightens the U.S. economy following inflation into recession.
I got it. We've got to go, but I want to come back. I want to have you come back if you can spare the time. Talk to me about these tariffs that we've got going on next time. But thank you for being here on today's show, Danielle.
Thank you so much. Have a great weekend.
You too. Danielle DiMartino Booth. You can reach her at DiMartinoBooth.com. You listen to CEO Money with Michael Yorba. Thanks for being here. Have a great weekend.